Today on Seat 11A, we are joined by Jörg Peters, Head of Investor Relations of Amadeus Fire Group, to present the company's Q1 2026 financial results. In this presentation, investors will receive an update on the current market environment in Germany, developments across the personnel services and training segments, and management's outlook for the remainder of 2026. We are very pleased to have him here today. Jörg, the floor is yours.
Dear ladies and gentlemen, dear friends of Amadeus Fire Group, and a warm welcome to today's Seat 11A's video call of the Amadeus Fire AG following the publication of the interim statement, first quarter 2026, we disclosed yesterday evening after the closing of the German Stock Exchange. Message for today: we started the current year on a positive note and confirm the forecast for the financial year 2026. More details to this in a few minutes. We saw first quarter 2026 business is performing in line with expectations and stabilized in direct comparison to the quarter before Q4 2025. Q1 quarter provides the basis for a gradual return to higher profitability as the year continues. For the next years, skills and qualifications are still needed. Scarcity is still existing, and change of needs will accelerate Amadeus Fire's positioning. Our commitment is to take every step within our power to let the Amadeus Fire Group back to former strengths. The overall economic situation in Germany slowed down again in the first quarter 2026. The gross domestic product in the first quarter was around zero, according to the latest estimates of German Bundesbank. Cautious positive indicators beginning of the year due to the war in the Middle East. And the ifo Business Climate Index fell sharply for the second month in a row to 84.4 points in April 2026. Besides this, the ongoing high unemployment rate of 6.4% in April this year corresponds to more than 3 million people unemployed. We had a declining business in 2025, as communicated like for like, slow start and quarter-by-quarter improvement during the year will be seen. Q1 provides the basis for a gradual return to higher profitability as the year continues. And compared with the fourth quarter 2025, key figures had already improved. Operating EBITA margin is down to 3.4% from 4.4% a year before, and the earnings per share is down to minus 16 cents per share versus 18 cents previous year. As already forecasted, the B2B market segment remained tight in the first quarter 2026, and we have seen more positive markets in the B2C and the B2G business. There was an ongoing uncertainty reflected in cautious demand and low willingness to change jobs in the candidate market. So the business performance in Q1 2026 was below Q1 2025. The business performance in Q1 remained stable versus Q4 2025, and the gross operating profit against the quarter before increased by 6.3%. So we have seen a weaker start in January, but the situation stabilized over the course of the quarter in February and in March. If you look to the figures on the slide, you see that there is a slight decrease in group revenue by 9%. Operating gross profit margin were also down roughly 10%. The operating EBITA was only down from 4.3 to 3 million. Looks dramatic in percentage-wise, minus 30%, but in total we are talking about 1.3 million only. If we go into the business development of the personal services, we see that there was a decline in revenue by roughly 17.5%, roughly same decline in the operating gross profit by roughly 19%. But compared to the quarter before, Q4 2025, we have an operating gross profit 6% higher than before. Focus is further on strict management of the cost base as well as productivity and quality control within the branch network. Roughly in the fee earners, we saw a decline of 17% corresponding to the revenue development for the personal services segment as well. As I mentioned before, at the same time, cautious investments in systems and processes prioritized to further develop performance and efficiency in this area. The decline of roughly 5 million in operating gross profit translates in a 1 million decline in staffing operating EBITA of 1.7 million versus 2.7 million the year before. So stabilized or bottoming out top line and improving profitability over the course of the year is to be expected. The training segment. The training segment recorded a robust overall performance in the first quarter 2026. The private customer sector B2C, namely the Steuerfachschule Dr. Endres, developed to slightly positively. The B2G market is growing again. Publicly funded training, B2G, is still below the previous year's level, but beginning dynamic development compared to the quarter before in Q4 2025. Increasing participants will translate in positive top-line development in this area. The corporate customer sector, B2B, showed significantly positive momentum due to the acquisitions of Masterplan and EduBytes. Nevertheless, B2B market in total is small, but as you could see on the slide, the percentage of the total volume of revenue of the training segment has increased over a year from 4 to 9%, more than doubled. Strategically, segment's development continued consistently throughout the quarter in line with our AI-first orientation. The goal is to systematically expand the service portfolio with AI-related training offerings and to address the growing need for company-wide systematic AI skills development through the corporate AI learning approach. Segment's revenue of 41.8 million rose by roughly 3.5%, mainly due to the latest acquisitions. The organic development has been flat. If you look to the results in this area, you see that the operating gross profit is rather stable, a small decline of 0.7%. We are talking about 200,000 euros. And still the gross profit margin is on a solid base of 57.2%, coming down from 59.6%. Accordingly, training operating EBITA of 1.3 million is very close to last year's figure of 1.6 million. And we will see during the course of the year that this will improve further on. Overall, the training segment ended slightly ahead of our expectations in revenue and earnings. Thank you very much for your interest and patience for our latest development of the first quarter. And we'll serve you again with more deep dive into especially the corporate AI learnings on Seat11A, as well with the ongoing development quarter by quarter.
Thank you, Jörg, for guiding us through Amadeus Fire Group's Q1 2026 financial results. Despite the ongoing challenging market environment in Germany, the company reported stabilization versus Q4 2025 and confirmed its outlook for 2026. You can find this video and many more management presentations from listed companies on Seat11A.com. Thanks for watching, and we look forward to welcoming you back soon on Seat11A.
Disclaimer. As described in the legal section on our website, Seat11A.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11A.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.